If you're over state pension age and on a low income, you may be eligible to claim for pension credit to help with your living costs. My name is Jack Rubis. In today's video, I'm going to run through what pension credit is, who is eligible, and how to claim for it. Pension credit has been in the news a lot recently, as this has now become the gateway for many pensioners to access the winter fuel payments since they became means tested. Pension credit is a type of benefit available from the government to help with living and housing costs if you are a pensioner with a low income. You have until the 21st of December this year to claim for pension credit in order to still receive the winter fuel payments. To be eligible for pension credit, you must have reached state pension age and your weekly income must be below £218.15 if you are single, and your joint weekly income must be less than £332.95. A partner is considered as your husband, wife, civil partner, or someone you live with as a couple. To work out your income, you must include your state pension, all other pensions, earnings from employment or self-employment, some benefits, and possibly make an adjustment for high savings. It's a good idea to work out how much your income is to make sure it's worth making a claim, though when you make the claim online, you won't have to input a total income figure. They will work this out from your answers and the data they already hold for you in order to make a decision on your claim. The benefits that don't count towards your income figure include the adult disability payment, attendance allowance, Christmas bonus, child benefit, disability living allowance, personal independence payment, social fund payments like the winter fuel allowance, housing benefit, and council tax reductions. If you have deferred your personal workplace or state pension, the amount you'd expect to receive is counted as income for this calculation. If you have £10,000 or less in savings and investments, this will not affect your pension credit. If you have over £10,000, then every extra £500 counts as £1 of income per week. For example, if you have £12,000 in savings, this would count as £4 of income per week. You can use the pension credit calculator online to help you work out what your income is and if you would be eligible to claim for pension credit. If you claim for pension credit, your income will be topped up to these amounts, and you may be eligible to receive additional funds if you have a severe disability, you care for someone, you have housing costs such as ground rent or service charges, or if you reach state pension age before the 6th of April 2016 and have saved money for retirement. You can fill in an online form to apply for pension credit in the link in the description below. Before starting, you will need your national insurance number, details of your income and pensions, and details of your money, savings and investments, usually for the last 3 months. If you live with a partner, you will also need their information. After filling in some basic information, you will be asked if you have been outside of the UK for a period of more than 4 weeks in the last 3 months. This is because you can get pension credit if you are away for 4 weeks or less, for example, if you go on holiday. You can receive pension credit for up to 4 more weeks if you are away due to the death of a close relative. Alternatively, if you leave the UK for medical treatment, you can get pension credit for up to 26 weeks. If you left the UK for more than 4 weeks, you will be asked some extra questions to confirm why you went away and for how long. After this, you will be asked a series of yes or no questions about yourself, your living arrangements, and your finances. If you are eligible, you will also be asked if you want to backdate your pension credit claim, because you can backdate it by up to 3 months. One of the questions to look out for is if you have any money or income from an equity release scheme. What this is asking is if you released the cash tied up in your home and have some money saved from a lump sum, or if you are still receiving small amounts from this as income. You should only be asked to fill in 2 figures on the claim. The first is the amount you receive from certain types of regular income. This includes maintenance payments from a former partner, work that is paid cash in hand, royalties, personal injury payments, payments from a trust or strike pay. The second figure you must provide is the total money you have that day. This includes any money you have in a current, savings or deposit account. If you selected to backdate your claim, you will also be asked for how much money you had on the date of the claim that it is being backdated to. Once you've filled in all your answers, you can review them and save them to your computer if you would like, before submitting your claim. You can also claim for pension credit over the phone, where you can download the pension credit form from the government website and submit your claim by post. You will receive a letter with the decision relating to your claim. If you are eligible for pension credit, your letter will include how much you will get and when you will be paid. If you disagree with the decision, you can challenge it using the contact details on your decision letter. Remember, even if you think you may not be eligible, it's worth checking, as pension credit unlocks a number of other benefits, including a free TV license if you are over 75. For more information, visit the pension credit section on the government website or give them a call. If you found this video helpful, don't forget to like and share it with others who might benefit from pension credit. Take care and see you next time.